global wealth distribution inequality has gotten much worse over the last few decades. For instance, as of 2022, about 70% of the country's wealth is held by the wealthiest 10% of Americans. This indicates that only 30% of the nation's wealth is owned by the other 90%. Another example is South Africa, where the richest 10% own 65% of the country's wealth. Additionally, many people do not have access to high-class financial services provided only to accredited investors, which are widely available to residents who are wealthier. By giving individuals access to a way to make, store, receive, send, and invest their money, cryptocurrencies can help to narrow the wealth gap. In today's video we try to find out how cryptocurrency could help tackle global income inequality. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex and many more. So watch this video till the end and hit the subscribe button. And click on the bell icon to get notifications for our future videos. So let's begin the video. How can crypto solve income disparity? Users can more easily access financial tools and send money abroad at a lower cost thanks to cryptocurrency. Many citizens of poor countries rely on their relatives living overseas to give them money to cover living expenses. 20% to 38.5% of the gross domestic product of nations like El Salvador, Haiti, and Tonga comes from remittances of money. Stable coins that are tied to the US dollar, such as USD Coin, USDC, and Tether, USDT, can guarantee that receivers receive a larger portion of transferred funds without middlemen taking a cut in the form of transfer fees. With some banks charging 3% to 5% and others a set fee of $25 to $45, SWIFT transfers can be expensive. Western Union transfers typically cost $25 when made online, $2.99 to $29.99 when made with a credit or debit card, and $7.99 when made in person. On the other hand, sending stable coins like USDC can cost between $3 and $5 on the Ethereum blockchain and less than 1 cent on the Cardano, Tron, and BNB Smart Chain blockchains. Even though saving an additional $20 to $44 on transaction fees might not seem like much to many, those who live in underdeveloped nations or have lower incomes greatly benefit from this. For instance, the typical monthly wage in Venezuela is about $25. People are now able to benefit financially from family members who work abroad thanks to these savings. Due to the extremely low fees and quick transaction times, family members will also be able to transfer money back home more frequently. Access to payment systems made simpler. Although PayPal is one of the most often used methods of payment for independent contractors, users must have a bank account connected to their PayPal account in order to withdraw their funds. This is due to the fact that users can only withdraw money to their bank accounts. The only other alternative is to utilize a PayPal debit card to make purchases. This can make it challenging for those without bank accounts to earn a living online. In contrast, blockchain technology has made it possible for consumers to accept payments devoid of the requirement for a middleman like a bank. To receive payment directly from another user, users only need to be in control of a crypto wallet. For internet freelancers, this can be quite helpful. For instance, a freelancer would only need to produce their cryptocurrency wallet if they were hired to create a website or do any other online function. Freelancers can withdraw their money from a Bitcoin ATM if they are unable to visit a bank. Bitcoin ATMs have been erected in nations including Uruguay, Nigeria, India, and Kenya, giving unbanked people another way to buy and trade cryptocurrency and making it a legitimate choice for paying out. Using cryptocurrency wallets makes it simpler for employees to transmit and receive payments as well as make money online. Even better, some wallets allow users to receive payments using usernames rather than the more common alphanumeric crypto addresses. For instance, the Web3 payment platform PIP, which is located in Solana, employs tags, such as user at Solana, rather than wallet addresses to stop users from sending or receiving payments inadvertently. By hovering over the tags to activate a payment box, users who have the browser extension installed can send and receive cryptocurrency payments through social media. Users must have access to protocols that make using them easier, as an estimated 20% of Bitcoin, BTC, has been lost as a result of human error. 75% of participants thought cryptocurrency transactions were stressful and unnecessarily difficult. Human-readable addresses, on the other hand, can alleviate this problem and promote adoption in developing countries. People from underdeveloped nations or with low incomes may have more options to earn money by using Bitcoin and self-custody wallets in the gig economy. Simple access to financial resources. By giving a wider spectrum of consumers access to financial instruments, cryptocurrencies can aid in closing the wealth gap. Centralized financial instruments like stocks, bonds, and indices typically demand that users sign up for accounts on websites and submit legal documentation, such as proof of identity and bank account information. On the other hand, decentralized finance, DeFi, enables users to interact with financial protocols including staking, yield farming, and lending or borrowing platforms using just their wallet. This makes it simpler for users with modest incomes and residents of developing nations to earn interest on their investments and to lend or borrow money. DeFi essentially levels the playing field in terms of financial instrument accessibility. Users can earn money with their crypto assets in a variety of ways in the DeFi sector without the involvement of any centralized authority, from providing liquidity on a decentralized exchange and receiving a cut of the traded tokens to staking stablecoins and earning up to 20% of the value staked. A currency that is inflation-resistant. The fiat currency of a country loses purchasing power when there is inflation. In order to battle hyperinflation, individuals in nations like Venezuela have embraced cryptocurrencies. Cryptocurrencies like Bitcoin are naturally deflationary, which means that as their supply shrinks over time, their value and purchasing power rise. For instance, 1 BTC was worth 40 cents in 2010 and it is now worth $21,000. If users in developing countries don't want to cope with the volatility that comes with regular cryptocurrencies, they can also hold stable coins. For consumers who want to maintain their money in a cryptocurrency tethered to the dollar, Tether and USD Coin are excellent choices.
Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.